The Pope has passed away, a moment of global significance that goes way beyond just religion or religious significance. While the world reflects, markets are already responding, quietly and strategically. Today I made over $5,000, trading a setup that most people won't even notice. But it wasn't luck. It was built on structure, it was built on timing, it was built on patience, as well as understanding how capital moves in times like these, moments of global emotion. In this video, I'm breaking down exactly how these type of events break down, shift market behavior, where institutions are likely positioning themselves, and the setup that delivered today's results with precision. When it comes to market movements, most people focus on the obvious, but real moves, the one that changes the trends or set up high probability trades, are driven by deeper forces, narrative, liquidity, and emotional timing. That's the lens I trade through. Not indicators, not height, just precision, and understanding how price is truly delivered. At first glance, you might think the Pope's passing wouldn't really trigger anything in the markets, but zoom out. The Vatican isn't just some super religious entity or building or structure. It's a financial institution, it's a diplomatic hub, and a symbol of cultural stability for billions. When that stability is shaken, even symbolically, it creates an emotional ripple. And emotional ripples affect how capital flows. It's not about direct cause and effect. It's about how uncertainty reshapes the expectations that everybody has in the public. And expectations, what does that drive? That drives all the decisions that are being made in the back end, on the front end, especially at the institutional level. So the question is, where could this sentiment shift start to show itself in the charts or the markets? So we're going to head to the markets, and I'm going to draw up some key levels where I seen the moves and how it played out even in today.
All right, so let me show you a perfect example of how institutional money uses these global events like the Pope's passing to create different opportunities in the markets. So this is NASDAQ futures. It's a June contract. What we're seeing here, it just isn't only price going up. It's engineered movement. So as you can see, when we go to the 15-minute time frame around a little early this morning, that was yesterday's. Let me show you. So around here, 4 a.m. during London session, we see price swept liquidity. It went past this low, prior to this low. So that sweep, it sets the tone for New York AM session, which we seen the delivery and price in. So you get this displacement, and what follows? A perfect retracement back to an imbalance. So I'm going to show it very clearly for you guys. Let's get rid of this alert right here I had earlier. So delete that. What you can see is, you see price right here, camera right here. Price came, it swept this low. What do we see? We see strong displacement, and we see a close above this high. That is a confirmation of change in state of delivery on the 15-minute time frame. So that displacement, that strong strength and direction speed, we see price came back down. What? It came back down. Price came back down to an imbalance. This is where institutions get involved. They don't chase. They let the fear or confusion around news create that inefficiency, and then they fill it. And then you could even go as far as to say this was some strong displacement as well. You could insert, because why? We had to sweep here during London, price right here, close above the high, and it set us up for this huge run to take out previous day high. So look how clean this is. Once price taps into that imbalance, and this is actually where I took this the buy. You can see it right here, the arrows. This is where I actually took the buy on my account and made that $5,000. So right here, see, going right here. Right here. So once price tapping that balance, you get immediate follow through, breaking through old highs and taking that liquidity. And it took liquidity all the way from here, which is previous day's high. And that's not noise, that's structure. That's narrative driven execution. By having that higher time frame daily narrative or hourly narrative, don't just look for narrative on the 1 hour, the five not the 1 hour, not just the 1 minute and the 5 minute time frame. But notice how the reaction is at yesterday's high. Let me turn on this indicator. It shows the different highs. So look at the reaction at previous day's high. What happened? It immediately rejected. It went back to a 5 minute imbalance. It went back to this 5 minute imbalance. I wanted to take this trade after I made the $5,000 a day. I wanted to take this trade, but I just wasn't on the charts at that time. So it grabs the liquidity and rejects classic profit taking behavior after engineered expansion. And so that's where I closed the bulk of my position, was really right here. I hit for a nice scalp on the 1 minute time frame. I didn't even hold the whole target. I did want to hold the whole target. This was my entry specifically. I wanted to hold the whole target, but I was satisfied with what I got. I had a very, very tight stop, because what I've been working on is my higher risk reward ratio trades, and this is a trade. No, it was tighter than that. Let me see. I'm trying to find the entry that I actually got on. Okay, yeah, I got in way lower. I got in right around here, and it was a perfect trade. So I locked in my position around here. It came down, end up getting in for another entry, and then it missed my original entry that I wanted to get in down here by just a couple points, and I would have that was my main entry that I wanted to get in, and I was going to hold until previous day's high. But guess what? Trading is not perfect. But here's the thing. This trade wasn't about being early. It was just about understanding where price wanted to go and why the market would allow it. Emotional headlines, smart positioning, and knowing where liquidity lives. That's the edge.
These aren't surface level moves. These are structural shifts built on human emotion, liquidity seeking, and strategic positioning. And the thing is, events like this, they don't always cause instant spikes or instant ruptures in the market, but they reset the board. If you want to understand how the deeper game is played, how price gets engineered and why, click the link in the description. Let's hop on a Zoom call and see how we can make the charts work for you. Make sure you subscribe, hit me on Instagram. I'll see you later. Peace.